Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping back down into the world of Bitcoin, taking a look at what's been going on with the price action and what I think is likely to happen next. Now as I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out. Let's jump right down into today's video. Some interesting developments with Bitcoin. So let's go ahead and check it out. So here we have Bitcoin paired up with USDT. We're using the 1 hour chart and Binance is our data source here. As you can kind of see, we're looking at a three-wave corrective pattern to the downside yesterday. We had our target range between 34,657 and 35,187. We did have our bearish structure print on smart money concepts. That has now actually reversed back up into a bullish structure. That happened in the earlier hours of this morning, actually last night, sorry, at 2100 hours last night. We saw this closed candle above the previous high. That basically has now changed our structure back into a bullish one on smart money concepts. So all of that is looking pretty good. We do see an interesting kind of structural point moving upwards, and that's kind of where we are today. So let's take a look. Right, we were battling the 50 EMA, 50 SMA. We broke above these yesterday at 3 o'clock in the afternoon UTC. We then saw the 50 EMA cross above the 200 EMA, and we've most recently just seen the 50 SMA crossing the 200 EMA as well. Okay, so we had the move down. That's all good. And right now we kind of have a bearish double top. We can see that right here with our wave 3 high, battling up against that resistance right there. So our wave 3 high was 37,972 and we wicked up to 37,980. It is slightly higher. So that is now a new local high on that one. Now, when we take a look at our corrections here, it still looks like there's potential to go down a little bit further. I'm going to take this down into a 15-minute chart here, and I'm just going to do a quick sense check on this little pattern that is appearing right here. Okay, because it does to me look like, yeah, that's what I thought. We hit the 1.618. So we have a kind of 5-wave pattern here, 1, 2, 3, 4, and 5. Right in here like this. We then corrected up, and so we're looking just for a zigzag pattern to come back down. We're looking for that 5 wave. So I don't think we're finished with this just yet. I think we've still got a little bit further to the downside. Let's take this back to the hour. What am I actually talking about here? Let's make some sense, right? So if we take this entire pattern, that 5-wave move there, we bounced up and then we start to come back down again. Minimum expectations have been met, yes, but I'm still looking at this as potentially coming down towards our 50 EMA, as you can kind of see right here, between 36,802 and 36,957. Right there would basically allow us to have a nice 3-wave zigzag pattern correction to then start to talk about this next kind of big surge upwards, which I do think is likely to happen. Now, we are oversold already on the hourly, but we're overbought on the 4-hourly, so still expect a little bit move to the downside with the bearish double top. That would potentially just get us finding support on that 50 EMA, which would basically mean that we're testing what we've broken through down here yesterday. So essentially we broke through it, we've rallied up, we hit the double top bearish situation, we pull back down, we find support on the 50 EMA, and then we're off back up higher. Okay, so I'm looking at this, I'm still looking at our target range on the high side, 38,753 to 40,080. That hasn't changed. Essentially, that is the wave 5 high point on our diagonal pattern here. That is a wave 5 positioning, which if I come over to the daily, essentially what we're talking about is this little wave 5 here, and all of this here is a 5-wave structure inside that 5th wave movement. And so we're just looking to take this up towards the kind of $38,500 to $40,000 is to get us into the final 5th wave movement on our daily chart. And again, our stochastic here can lift up quite a bit. So we'll keep an eye on that, see if we have that progression. 40K is an interesting zone that I'm looking at. And there is also resistance right up there as well. So just kind of bear that in mind if we show you that what that looks like. I'm going to take from here, I think it is right on one of these wicks right over here. That's it, right there. So let's go ahead and just pull this across. So as you can kind of see, this is a previous area of support. And then over here, when we lost this area, it was tested before we came back down, right? So we know that this is the area of resistance. We were dancing around it quite a bit. As you can kind of see, support, lost it, pushed up, lost it, pushed up. And we're kind of dancing around this area until it turned back into resistance. Previous support gone to resistance. And so if we come over to where we are, this is the target range between essentially 39,600 and 40,000. That is likely to be our resistance on that final fifth wave movement, which will tie in nicely with our target range right here between 38,753 and 40,080. Right, so all in all, that is looking where we're likely to head. That's going to lift our stochastics back to overbought, and then we'll start talking about those corrections, those bigger moves to the downside, where we talk about equilibrium being around 31,000 and so forth, right? So there's going to be a big correction once we kind of hit this level. We're kind of reaching those upper areas now. On structures, now we are still have a bullish structure. We still do have a bullish structure on the daily time frame. We're back to having a bullish structure on the hourly time frame, so those things are not too bad. Now, from a weekly standpoint, you can see that equilibrium is actually around 41 to 43,000. That's basically your swing high on your all-time high, actually, and your bear market low point. That's a 50% retracement-ish from your premium and discounted areas. I think is actually not as low as that, but it is what it is. It's quite interesting to kind of see. And you can see that we're up against this area of interest that we've had for quite some time. This is the previous area of support that it does look like we're going to push through, which is basically 36,262 to 37,717. And of course, our ascending triangular wedge is bearish anyway. We're overbought. Weekly, we're overbought on the daily. None of that has changed, so we are looking for slippage back to the downside. Support to be found at around $30,000 to $31,000. Lose those, then you are talking about support at $24,000 to $25,000. If you lose those, then you're talking about $20,000 to $21,000. And if you lose those, well, then you're revisiting those lows down at the bottom. So we know that there's going to be good support levels to be found on a correction to the downside, which is an inevitability. Whether you choose to believe that or not is entirely up to you, but it is inevitable that we will eventually be moving back down in price. And the case is simple. Where do we find support? Do we find it at 30 to 31,000? Do we find it at 24 to 25,000? And do we find it at 20 to 21,000? Right? Those are the questions that really you need to be asking yourself, not about whether or not you're going to be able to just go up from here and never go back down to those low levels. Right? A lot of people believe that you cannot simply go down. Now you've moved up, and that simply is not the case. Knowing that our momentum and we're exhausting the markets. This here is Bitstamp as our data source with USD as the pairing. You can see volumes are non-existent. We know where volumes were in the previous bullish market, right? We can see from the bear market low point where volumes were non-existent. As soon as we started to get reversals here, the volumes were very significantly higher. We can see here that during this bearish market, volumes were slipping to the downside. But even in this market here where we've pushed up so significantly, volumes haven't improved. They're static. They're just low, right? And this is on Bitstamp. Now, if we take a look at this and we go ahead and throw it onto the Binance data source as well, you can see here, if we zoom out, just how non-existent those volumes are, right? So all of these moves to the upside, they're not backed from demand. They are literally, in my opinion, market makers pushing the price to the upside so that they can liquidate assets. Let's think about who is talking about liquidating assets, who is looking to potentially, or who were in trouble, who are no longer in trouble because the market has moved up. Ultimately, the market to me doesn't seem to be moving in a natural way. We can see here volume profiles are significantly lower, not just on Binance. Even though Binance is the largest exchange for volume, we are still seeing incredibly low volumes on Bitcoin, incredibly low volumes not just on Binance, but also on Bitstamp and other exchanges as well. Okay, so be aware that things here are not looking good. We also have bearish divergence on our daily time frame as well. So we're getting to the point where we need to be realistic and start thinking about corrections to the downside. It's not a popular subject. People don't like to hear it, but it is what it is. And we are going to enjoy some cheaper prices at some point in the coming weeks and months. Bitcoin dominance also slipping to the downside as altcoins are having a little bit of a run. Interesting to see. If we take a look at total market cap here, excluding Bitcoin and Ethereum, this is a total 3. We can see here that actually, some money has been flowing into altcoins most recently, and we've had a little bit of a run here. But again, I don't think this is going to be sustainable either. But let me know what your thoughts are in the comments down below. I'm going to leave this video right there, kind of giving my thoughts and opinions on what I think is going on. Let me know what yours are in the comments below. If you found it useful, informative, smash the like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will not miss another video update. If you haven't yet joined us in Discord, check it out. Link is in the description below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out. Until the next one though, guys, have a fantastic day.